Let's see. Good morning, traders. Daily profit plan. All right. I had a great class yesterday with double ups, master class at 1:30. Today, we're going to do it at 1 p.m. I've got another meeting at 2 o'clock, so I'm going to bump the double ups. So we have double up alerts master class today. I'm going to do that at 1 p.m. Eastern time. Deanna, if we can update that in our calendar and send it out via Telegram, or at least I will. But 1 p.m. Eastern time today for a master class. We had a great session yesterday. Ended up having a trade. So I took a trade that was a winner for about $130. Had I not done anything for the rest of the day, it was up 950 bucks. To be fair, it would have been a net day about like 450 to $500. It was just funny how we talked about it because it was actually not the price that I originally traded. So I'll explain that in just a second. So, but we have another class today at 1 p.m. I had a really nice email today from Ernest. I'm going to give Ernest a shout out. He actually jumped into a trade with me on the double up strategy and ended up grabbing a 150% winner. So that's one of many, I'm sure, to come with Ernest and everyone in the classroom. So it's not terribly difficult. Just understanding there's a game plan every morning. We're looking for, high probability direction. We're looking for where order flows are going, and we can position a trade that only sets up for low risk, high reward. And we really have to manage winners in the trade service and not losers. Losers are very small. So that's what makes the class a lot of fun for me. It makes it very easy to manage and take these trades. All right, let's get a couple things up here for our key levels. Let's get our VIX up today. Where are we at? VIX at 16.21. Delete our highs and lows yesterday. All right. So looks like we have pre-market futures up just a tiny bit, 0.09, S&P opening maybe about 0.07 to 0.08 higher. This is interesting, these last like 30 minutes of trading, this market from two gap fills. So we had support right here, and we had a gap fill right here. I mean, price for the day was very contained. Plus or minus on the day was essentially 0 points. But end of the day, it's like, pretty choppy price action, and then the last 30 minutes just ridiculous all the way up here. So what I was saying on that double up alert is I had a trade that was looking very good. I actually took profit on the trade when price was down here around 3 p.m. I took profit around like 2:30, but it was a trade that won. It was like a $325 winner, and then my other one was a net loser of like 190. So it's like $135 on the day for that particular trade. And then the end of the day, I actually had a pin price at 64.50 as well as one at 64.10. So the one that I got paid on yesterday that I took profit on was 64.10, but by the end of the day, this thing closed at 64.48, which was only $1.73 off of my pin price. So that was a $1,245 profit minus the, let's see here, minus the $1.73. So a pretty good winner on that trade. Crazy how the market got there in the last 30 minutes, but it doesn't matter. These were two of the key levels that I was looking at. And I do that all thanks to this software that I reference every single day. We talk about this. I show my levels. So this software is what lets me see real-time order flows and where I think prices are likely going to be going and getting stickier for the day. So, today pre-market, I'm looking at levels up into the 64, 70, 80 zone. If we open up a little bit higher, my goal is hopefully we can sell some premium up here. Are we going to see the market? I don't know how volatile it's going to be on a Thursday. I mean, non-farm is tomorrow. It might be like a big nothing burger. Maybe the market moves a lot today, where it's like we never know. Day, um, oh man, I got a text from one of our members, Dave. Dave is actually in Salt Lake City right now. Just send him a text real quick. I'm only about 25 minutes from the airport, so I wish I could just sneak over and say hi to Dave while he's got a 2 hour layover. But we all know Dave. Dave E. become a pretty familiar name in daily profit play land. The guy just crushes it, making like three, four, five trades a day, and does really well. So, all right, who's in the house today? We've got Tom here, Phil here, Rich here, Dr. Barnes. Good morning, Willie. Good morning, Sandy and Randy. I love when when the two of your names are together, Sandy and Randy. Vladimir. Good morning. Andy. Good morning. Greg, Don, Peter, Mark. Good morning. Donna. Good morning. Catherine. Good morning. Phil, 5 hours from me. Where you at, Phil? Dave, you live up in Park City? I mean, I go to Heber City every week, man. Every Monday and Tuesday, I'm in Heber City. Chuck's here. Good morning. Good morning. Boise. Oh boy. Oh yeah, yeah. Boise. I should have known. I have yet to drive up there. I was up. Well, I take that back. I was up there. I attended a wedding up there. Do I ski? Yes. I skied a lot when I first got out here. The one thing that bums me out is there's no night skiing. It's difficult for me to get out to the slopes when they all close at like 3 or 4. Park City, especially, I had the Epic Pass, and I think yeah, last runs by 4 p.m. So I dabbled at Brighton for a while, and it's just such a pain in the butt to get to Brighton. Up that little Cottonwood Canyon Road at 13 miles, and it's switchbacks and it's covered in snow, and you need chains on your tires. So it was fun to ski at night, but it was such a pain in the butt to get there every time. But yeah, I'm up in Farmington now. I was in Salt Lake City for the last year, Heber City before that, and up in Farmington. But yeah, I actually want to check out Snow Basin this year. Let's see here. Fort Bridger, Wyoming. Yeah, Wyoming's close too. I mean, Evanston's like an hour away. Look at all these people just hanging out in the West. So yeah, David, let's hook up. We can hook up this winter. That'd be fun. All right. So levels for today, we'll get our VIX levels. We'll calculate our highs and lows. Most likely, it looks like our bigger flows. I mean, we could go either direction, but I'm going to try to sell some decent premium. If price is going to rally, there's two ways to approach this. Okay. So going back to, I don't know if I took a screenshot of this yesterday, but I was going to show. Let's see. This was a. Actually, yeah, this was the example from yesterday. I blurred out. It's kind of poorly done here, but I blurred out the price action. So this is yesterday's chart, and if you can see my lines, we had a lot of liquidity up here around 64.50 and 64.45 for the day. So just make a note of that, 6445. And then as the day was unfolding, what you're going to see with the real price is price hit resistance, right? And then started to roll down for the afternoon. And those liquidity levels that I'm showing here, 64.15, 64.10, 6400, started to fill up. So what I did, and this is part of my double up trade, is I put a trade that allowed me to get paid if price comes to this area and allowed me to get paid if price comes to this area. So this trade was a risk of about $200. This trade was a risk of about $400. And net on the day, if I would have taken a well, if it didn't manage the trade and let it close all the way, this trade at the top would have paid about $1,000, and this trade would have lost $200. So net on the day would have been about an $800 day, which is obviously not too bad. Okay, but how it got there was kind of crazy because the market came down here, hung out, and then the final 30 minutes it just ripped straight up to 64.48. My pin price was 50. So I was only off by about $1.70. But what was nice is my net, that's what I call it for double ups, is I cast this big net and it was 20 points wide. So I had like a 40-point area to be right. And I'd say thanks to this software here, I was kind of spot on within, a couple of dollars. So I'm going to say that's lucky, but I also didn't hold it all the way to the end of the day. Had I done that, it would have been a nice big winner. I ended up grabbing about $135 out of the trade, which I'm still happy with. That paired well with our 30+% winner daily profit play. So all in all, pretty good day. So just saying this because I'm running a masterclass today at 1 p.m. If you'd like to learn more about this is all about double ups, and the trade is only there's two strategies that I deploy here, and it's only about low risk and high reward. That's all I care about. and there's ways we can kind of cast this net. We can, get a high probability direction for the day. I trade SPY, Qs, SPX, and Mag 7s. So it's not a ton of looking. It's just spot checking things every day. Okay. All right. So that's where we're at today. Looking to open up just a little bit higher. You want to make some notes: 64, 70, and 80 on the upside as far as call resistance. And then 64, 20, and 10 on the downside just for intraday levels. So I have that pretty close to here as well. Futures is slightly, 0.09. So we'll see where the gap's going to be. VIX is at 1624. So 1624. So possibly like a 1.01% move from the close. 1.01 puts us up to 65.13, which would be an all-time high. So I'm going to go 65.10 to 15. I'm also working on an indicator that would just give me all this at once. I'm trying to work on a bundle indicator. I should have that for my team today. I'm looking for it, actually. Hopefully it's done today. So I'm looking for an indicator that will combine my VIX rule of 16 as well as my highs and lows and ATRs I'm looking for the day. So I'm working on that. Hopefully that's going to be ready in the next couple of days. But that'll be for my daily profit play members. And let's go 1.01 to the downside based on a previous day's close. 1.01 here puts us down to about 63.85. 63.85 to 63.80 here. Okay. So those are going to be kind of my key levels. I don't think price is going to go too much higher than this, but obviously I could be selling, up into this gap area as well. So if we are going to make a run to 75 or 80, I'm hoping that we can still sell out of the money calls and have that be a pretty safe level to generate some income today. Okay. And, I truly don't know what direction we're going. If we open up here, do we, fall to the gamma pivot point? Do we fall down, rally up? Do we rally up, fall down? I don't know. Okay. But I would say within a pretty high degree of confidence, without a major market event today, ADP already printed, non-farmers tomorrow morning. If there's a calm before the storm, maybe the market just kind of chills for today and we can just collect some premium. Okay. All right. So potential high, potential low. This could be modified slightly, but futures market isn't really going to be moving too much. Took a nice winner on pinch point yesterday with a trade that was upside down for a couple of weeks and it finally turned profitable. That was JAZZ. So close that one out for a winner. It's already up another 20 cents. So if that would, increase your bottom line a little bit if you're still holding that trade. But we've had 1, 2, 3, 4 weeks of running. This was the September 19th expiration. So I was also happy to see this from a losing trade up to a winner. And it was nice to get that pinch point set up. So all in all, things going, just fine. We still have to monitor some waterfall income. I think if we're going to have some weakness based on the technicals, I keep showing these thumbnails in my YouTube sessions, September history lesson, September scaries. I'm just going to keep playing this simply because I would be really shocked if this market, as far as gains this month, if we survive non-farm, inflation data, and the Fed, and the market's just going to keep plugging away and going higher. I would be really surprised if it just feels like it's going to set up for a bigger correction later. So I'd almost rather see the market just have its day, rip the Band-Aid off, do it this month, do it in these next couple weeks. From top to bottom here, we're only talking about a correction that's like maybe 3%. Okay. That top to bottom is 2.2% in the last couple of weeks. Before that, we had about a 3% correction from July 31st to August 1st, 3.3. So that's the most we've had as a correction was 3.3%. This is 2 point some percent. So it's just not there yet. This trend line, if I zoom out a little bit, this trend line is still something I'd like to watch closely. I'm connecting some recent lows. This is that rising wedge pattern that I talked about. So if we are indeed making a rising wedge, the one thing you want to be mindful of is if we break this low, we are going to fall. So if we break this low right here, watch these prices closely. But if we take out this low, 63.60, we take out this 63.40, there's room for this thing to fall pretty quickly. Okay. Again, that's not to scare anybody. That's just saying, like, directionally, this market is holding holding these levels. But if we break and something gives, whether it's a gap lower, it's probably going to fall pretty fast. Previous all-time highs right here, moving averages on the higher time frames. A few hundred points off the top is not that big of a deal. And like I said, I'd rather see this market do it now than still. I mean, I want to short this market so badly in Q1 if we just do this. If we do this for the rest of the year and we have like a Q1 bubble, this thing's going to freaking pop. So I'd rather just see the market dip and then we can participate in another leg higher. But just constant up and constant up, it's not a bad thing. Obviously, it's not a bad thing, but that's good for passive. I'm talking about, look, man, I want to position. I want to allocate. I'm at 50% cash. I want to put that cash to work for better opportunities, not just buying all-time highs, you know? And I mean, the history lesson is this. If we have valuations at 22 times earnings, the forward returns are garbage. So for everyone that's like the market's going to keep generating 10, 15% a year, it's not. Not at 22 times earnings, not at 24 times earnings, not at 26 times earnings, not Mag 7 at 30 times earnings. It's just like statistically, it's hard to keep pushing those numbers. It's hard to keep pushing those earnings and those multiples. So usually if you're at 20 plus earnings on the S&P, your forward returns are pretty terrible. And, the math this year has been, the market has not been incredibly broad. It's been mostly Mag 7 and tech and AI. That's led the earnings growth. It's led the earnings multiples. So unless we're going to see the broader market get way healthier and way stronger and lift the Mag 7, we're going to see the Mag 7 possibly stumble. And if it falls, we all know how big it is. The Mag 7 is like 35 to 40% of the total market cap of the S&P. That's insane. So the market needs to broaden out. And unfortunately, a lot of times the market broadens out with massive rotations. So anyway, just pointing out a couple levels. If we break 63.60, 63.40, do not be surprised to see this thing drop a couple hundred points. I don't think anything extreme. I think we might see like a 5% correction. If it's going to be a bit more volatile, maybe 10. But here's a daily time frame. Look at some of these key levels. I know my chart's a little bit noisy here, but just look at our moving averages. 50 period, 100 period, 144, 200. Pretty common dynamic moving averages, previous all-time highs. Give us some support. That's all I'm looking for. Okay. All right. What's happening, Mark? Okay, Larry and John, I didn't officially post. I took that trade in the afternoon at like 12:50. I didn't post that as official alert because it was not the standard strategy. In fact, we're teaching the second strategy today. So it was just a trade I wanted to like take it, share it, talk about it, and that way we can add it to the arsenal after today's masterclass. So 1 p.m. today, I'll be live for double ups, and we'll talk about it. We had a good class yesterday. Pairs well with the masterclass workshops we did a couple weeks ago. I think we had a 3-day workshop on like August 12th, 13th, and 14th. So if you're in double ups, please go back and watch those or watch yesterday's recording. And we'll have another good class today with an entirely new strategy. So, I mean, new as far as it's a spin on a goodie. So, but it's just different. I mean, there's instead of 3 legs, it's 4 legs. It's, I just want to make sure that we can deconstruct it and break it down and make sure everyone can make some sense of it. All right. We are at 9:23. We have market opening in 7 minutes. I talked about the ADP numbers this morning. Here's Forex Factory. So ADP came in at 54K. Revision from 104 to 106. 73 was expected, came in 54. Unemployment claims also higher. Okay. Did this change the market at all today? Not really. Services PMI. 10 a.m. Okay. So here's kind of my initial game plan for the day. Highest liquidity level that I see, highest gamble level that I see is 64.75. We're going to be opening up around 50. Broker. Get into my broker platform here. So for the SPX this morning, make sure this thing's connected. Yep. Okay. So SPX this morning, we've got IV rank at 15.2. Up. I'm going to close that log back in. I hate it when it does that. Sometimes they get these like weird black patches in my Tasty Trade account on the desktop. So I'm just going to log back in. Randy says today's masterclass for double up members. Yes. Yep. So if you're in my double up service or want to get in my double up service, class is at 1 p.m. The deal is, I think we're offering it's like 75% off, something like that. So I mean, the class is pretty darn cheap. It's I think it's a very it's a very good strategy. It's a very good course because so many times we have to worry about manage. I mean, I say it all the time: manage risk, manage risk. It's the most important thing you can do to survive these markets is manage risk. So it's a strategy that already by default is managing risk because the risk is always small in these trades. And then once the risk is managed, we spend our efforts managing winners. So small risk, high reward. A lot of times the setups could offer, like yesterday, for example, I had a trade that offered $1,600 with a $400 max risk. That was a 4-to-1. I had a 12.45 that was a 255 or 250, yeah, 255 risk. So a 12.45 divided by that was a 5-to-1. So those are just my trades from yesterday: a 4-to-1, 5-to-1, and I didn't make 4 or 5-to-1. I made $135, but it was enough to move the needle, enough to make another nice intraday winner. If I let it go all the way to the end of the day, I was pretty spot on with my end of day price, and that would have actually offered me, about a $1,000 winner out of the 255. Oops. So $1,000 winner was the way the thing settled. 255 was my max risk. So about a 4-to-1 was actually given at the end of the day, which is pretty awesome. So when you get a 4-to-1, it's like you can afford to take small losses because those small losses are going to be tiny. So anyway, manage risk. And in a class like double ups, the risk is always very, very small. Okay. Waterfall, we just did that last week, Mike. Waterfall is on sale. I think it's like $12.95 or $14.65 or something. Usually it's like $34.95. So I mean, if you have any questions on these services, you can always reach out to the team. It is support@prosperitypub.com. If you have any inquiries, you can go to my website, chrispulvertrading.com. Check them out. You're welcome to email me as well. Ask me questions. You want to know more about these services, chrispulverpub@gmail.com. Okay. All right. So for today, we've got the market open here about 3 minutes. I'm going to probably set some. I'm looking at the highs up here. What I'd like to do ideally is try to get as much premium out of these levels as possible. We're going to open up probably around like 64.50 or 64.55. So realistically, the plus or minus on the day is only going to let me take some good premiums, probably in like the 75 and 80 zone, which is fine. However, we can clearly go higher than that, right? So if I'm going to set some sell calls up here, this is going to be like a one contract batch that if we go higher, I need to also sell higher. So my goal would be if I set up a, 64, 75 by 85, then maybe an 80 by 95, just do a kind of build my own call wall, if you will, where I sell calls, I do bear call spreads. All that means is I'm putting a line in the sand to say, I don't want price to go much higher than 80 or 85. Okay. So if price comes up here and then rejects, great. But understanding that the VIX might allow price to get up to 6,500 or so. So this would be like batch one. I'm hoping to see price, go no higher than like 65 and then sell higher if we're going to go that way. And this could be like all a big run up going into non-farm. Now, let's just check two things here, okay? Because today for SPX, we have a plus minus of 26 points. And because of non-farm tomorrow, we have a plus minus of 53 points. So if I want to go out a little bit farther on the chain, I could probably just do a one-day expiration and focus on selling nice and high for Friday. Okay, so I'm curious, how much higher could I sell for Friday and maybe put in similar to what we did last week for daily profit play, which would be like a broken wing butterfly. I'm curious. Maybe I can get something at the 20 to 30 zone and try to keep price. I mean, from current price, that would be 50 to 20. That's like a 70-point move, and the broker has about a plus minus 53. So just food for thought. So I might be positioning a little bit for today, and also maybe positioning early for tomorrow and trying to get some highs. Unless we have just like a huge surprise print for non-farm, I still don't think it holds. I really don't. I mean, like I said, technically, I am still pretty shocked the market has gone this long without at least finding the 50-day moving average. All right, so it's officially opening bell. Let's look at the fourth. Okay, and how high up can I go? I'm looking at my deltas here. I'll let this just adjust. So I can do the 75 and 80. That's a 17 delta. See where this thing's opening up. There we go. So I think 75.80 is a pretty good resistance level. We're right. I think directionally, if we go to that 50% ATR, that's probably a target. If we run up higher, I want to be selling higher, 6,500 or so. So let me see what I can get here at the 70, 75 zone. Maybe we can get some decent premium. 70 by 75 for $1.30. That's not bad. We'll move this up 95 cents. This isn't bad for a 75 by 80. Try to get this for $1. Okay. I'm putting in a pending order, 64.75 sell call, and I'm going 5 wide. So I'm selling the 64.75, buying the 64.80, and I'm putting in a pending order at $1. Okay. And then I'm going to go, that's 75 and 80. Then I'm going to go 85 and 90 for another $1. I'm going to put those two trades in for now for starters. Both of them are pending. Neither has filled yet. Okay. And then real-time levels. I think that if we end up making a run towards this 50% ATR, I should be able to get filled at a pretty decent premium on that. And that's obviously what I'm looking for resistance. Okay. Now, 2 ways I can trade this. I just got filled for $1. So trade is in. I'll put this in Telegram. So daily profit play, new trade, SPX. Today is the 4th. Selling the 64.75 call, 64.80 call, collected $1. Okay, that trade is in. And then I have a pending 9/4 expiration. I'm selling the 64.85, 64.90, also pending at $1. Okay. No, it's Thursday, Randy. So I'm gonna just stick with kind of doing a one directional trade. I like to do Mondays and Wednesdays for standards. We've done the numbers. Mondays and Wednesdays, like standard. That's what the results usually show. Okay. So on this note, let me see here. How far out could we go for Friday? So the 5th. And if I went up to, I mean, these are 10 deltas, 25, 30. I'm going to look and see either what do I get here? $1 out of 10 wide. I don't love that. Maybe I can do a better trade with a broken wing butterfly. Maybe a pin price. If I pin this thing at like 20, that is a 10 delta. So this trade, could I get $1 out of this trade? Maybe 25. Okay. This isn't a bad trade. I'm going to try to get this one filled for, I like this trade. I mean, 50 cents, but it offers me a profit trap. This is going into tomorrow's expiration. We'd have to break all-time highs for this to be the trade. Let me see if I can get, I mean, I'm not super stoked about 60 cents, to be honest. I'm going to try to get this one filled for $1. All right. So I'm going to put another pending order in the chat. SPX. Now be careful on this one because this is a 9/5 expiration. So I'm doing a broken wing butterfly out to tomorrow. $1 credit pending. So right now that order is offering 60 cents. I don't mind taking the trade for 60 cents, but I'm risking $900 in the trade. I have a profit trap of $5. So if we're between 65.20 and 25, there's a profit trap there for tomorrow. But I want to get filled on $1 because the price is going to go up today. If price is going to find a way to hit this like 75 or 80 zone, then that's going to put, potentially the move into, I don't know, we could find it. I mean, who knows, man? This market could be like, yeah, let's just poke all-time highs again. I hope we don't. I really hope we don't. But that's why I'm gonna wait and see, like, give me a better fill. Okay. So if I do that trade, I'm gonna throw in another one here. So the 30 and 35. So 30, 35, and then skip. I know I'm throwing a lot of trades at you, but just bear with me here. Okay, another trade there for $1. So pending order. All right. I'm going to edit this one out. I'll show you what's going on here. So daily profit play. I'm doing some work per usual. And I'm going to add in SPX 95 expiration, buy the 65.30 call, sell the 65.35 call, and buy the 65.50 call. $1 credit pending, not filled. These are two broken wing call fly trades. Looking for prices to struggle to make all-time highs above 6,500. Hopefully, we will see $1 credit filled. Okay, so if these are filled for $1, that's going to be filled today, and then the trade is going to expire tomorrow. My goal is I want to see if price can hold, below 65.25, below 65.35. If I wanted to take this trade out for Monday, maybe the same situation for a Monday. Is just give it time over the weekend. I could probably go a little bit further out. So I don't know. I'm just kind of stacking up some trades. By Monday, we're looking at like a 57-point move from today to Monday. If I can go up a little bit higher in the options chain, now I can go up to like 40 and 45. So maybe doing the same type of thing here. Buy the 35, sell the 40, do a skip strike. So similar risk. Try to get this one filled for $1. So if you want to take a little broken wing call fly adventure with me, I'm going to set some of these trades. SPX, this is a 9-8 expiration. 65.35 call. 65.40 call. And 65.55 call. $1 credit. Pending, not filled. Okay. So I'm doing like a little, stacked up broken wing call fly. Each one has a $500 profit trap. The price is going to try to inch up and make new highs. We'll see. So those are all pending and posted. The goal for today is let's turn that $1 credit into a winner. So let's see if we can manage that winner for today. So SPX, this is my daily profit play for today. So I've got a bear call spread that I pulled in for $1, and it's down about 20 bucks right now. If I see $1 that shows me 70 or 80 cents profit, so $70, $80 profit, I'm just going to take it. Okay. No, these orders are good. I'm going to let these pen for today and tomorrow. These are orders that for daily profit play, if this gets filled today, cool. I'd also leave these pending for tomorrow. But more than likely, if we're going to see a move up today, now that's a big question. Because the nice part is, well, here's the reality. Let's say that price falls back down to this, positive negative gamma pivot zone around 64.30. Well, that means that our dollar daily profit play today is going to be for full profit. So we'll take as much of that as we can. That also means that my call flies up here, my broken wing butterflies, which means I want price to stay below all those levels. If I'm having these penned at a dollar, none of them are going to get filled. If price goes down today, these are not going to fill. And in a way, it's okay. But most likely, if price comes up to find this 50% level, this is my largest gamble level today. So for a double up trade, for example, this wouldn't be a terrible surprise to see price getting to, 64.75 today. So on that note, let me see if I do double up trade. So SPY for today, 75. Could I do a So if I did this as a call fly, pin this thing at like 75, costs about the same whether it's a put fly or call fly. So if I do 75, I think we can get to 75 or 80 to at least tap that level. That's where most of the order flows are coming in right now. Oh man, it's already 60, 70, 80 cents. That's a big difference. I'm going to hold off. If we're running up here first, this is just what I'll talk about a lot in the masterclass today for double ups at 1 p.m. If the first thing out of the gate is the market's going to go up, that's okay, but I usually have to take a much smaller profit target. So if I get into the trade for like a 40-cent debit and it goes up like within the next 30 to 60 minutes, that 40 cents is probably going to be worth 50 or 60 cents credit. So I'm going to have to take like a smaller profit. I'd almost like to see price just, do a little bit of nothing. So if I've got anybody doing the standard daily profit play, let me know how it's going, because right now we've got some good indecision here for about 15 minutes. Sure. The trades I'm talking about for those broken wing butterflies for daily profit play, they look like this. If I am buying the 20, okay, so that'd be a +1 call at the 20, and then I do a -2 at the 25, and then I guess 25 would be here. Let me get my lines right first. So if I did a 20, so I buy the 20, I sell the 25, and then I buy the 40. So if this is a +1 and then a -2 and then a +1, what this looks like on an options graph, and I'll show you exactly what this trade does. So if this trade gets filled, I have credit of a dollar, I have a profit trap, and then I have risk. Okay. So this would be a $1 credit that I'm trying to get filled for. This would be a $5 profit trap. That gives me about a 10-point area to still get some profit as well as not take on the risk. And then beyond the 65.40, this would be my risk is at. And the max risk is going to be $9. Okay. So the way this trade is built and works is I'll show you this in option strat. So option strat, I'll build this out. This is a trade for tomorrow. Bring this over here. Sometimes the Zoom thing just never cooperates. Let me go here. Okay, so if I build out a long call butterfly and I put this for tomorrow's expiration, I'm looking to sell the 64.25, buy the 20, and then buy the 40. So let's make sure this is accurate. What in the fudge? Buy, sell, buy. This thing seems to be all jacked up. That is weird. Oh, 65. That's why. Doy. Okay, 65.25. 65.20, and 65.40. There we go. Now, what the heck happened to my expiration? Let's try this one again. So strange. Option, strat, build, long call butterfly. Tomorrow's expiration. Let me check Telegram. 65.20. So I'm buying the 65.20 call, selling the 65.25, and then the 40. What the fudge? I think it's just because it's showing real price instead of my pending order. Well, that's annoying. All right. Let me build this out. So it's maybe a little bit easier just to do it right here. So it's a pending order for $1. Okay. If this gets filled, here's what the trade means. This is a 6, and this is a good lesson. This is a good lesson for, a really good strategy. If you like to kind of call the top, this is a good way to do it. I basically have a credit, and there's a part of this trade that's a credit spread, and there's a part of this trade that's a debit spread, and that's why we can combine for this profit trap. But this is the 64.20. This is the 64.25, and this is the 65s. So 65.20 and 65.25 and 65.40. Right? Now, here's how the math on this trade works. Math on this trade works this way. If this trade would get filled, it's $1 credit. So all I need price to do for that full $1 credit to be kept is this is an expiration for Friday. Okay? Type in a wire yes in the chat if everybody's following me right now. If this trade gets filled for $1, here's exactly what's going to happen. So if this trade gets filled for $1, all I need price to do, if price is less than 65.20 by Friday expiration, I keep the $1 credit. Okay. If price is 65.20 to 65.30 by Friday expiration, that's a profit trap. And I'll discuss that in just a second. If we're greater than 65.40, that's my $9 risk. Okay. So we have to be above and closing above 65.40 for us to take on that risk, which obviously I don't want to have. I don't want to have that happen. So the reason I said I come back to the 65.20 by 30 is because every dollar inside of that is a potential bonus. Okay. So if SPX is 65.21, that's a $1 bonus. So $100 per contract. If SPX is 65.22, that's a $2 bonus. Okay. And it keeps going and going and going. Now the max profit, the max bonus is 65.25. That's the $5 bonus. Right. So if we go beyond that, if SPX is 65.26, that's a $4 bonus. Okay. Follow my triangle. So we have this point right here. This is going to be 65.20. So this level is 65.20. This level at the top, this perfect pin is 65.25. And over here is 65.30. Okay. Actually, take that back. That'd be the 40 would be my risk. So this would be the 40. 65. No, that's right, because it's going to be $5 out of the way before I start taking on risk. So this would be 30. So the way this works is if it's 65.21, 2, 3, 4, or 5, that's a bonus trap. If it's 65.26, 7, 8, 9, 30, that's my break-even point. Anything beyond 65.30, I'm taking on a little bit of risk. Okay. So the reason I like some of these trades, like a broke wing butterfly, is yes, I'm calling the top for this particular trade, but this right now is a 10 delta scenario, which means price would have to do something pretty out of the normal. We'd have to have almost a 2 standard deviation move to get there. So, I mean, is that common? I mean, not particularly. And the plus or minus for the day on Friday is already calculating the non-farm payroll type move. So the market's already pricing in, market makers are already pricing in what non-farm is going to potentially deliver, which is like a plus or minus 50 points. Okay. So if this trade gets filled, all I need price to do is stay below 65.20 and I'll keep that dollar. I do have a profit trap in here. This is going to be at the end of the day. So that profit trap offers, if I'm willing to hold this thing all the way to Friday's close, if we're anywhere inside this profit trap, what is kind of unique about these trades is I can take this trade on for a credit and I can close it for a credit. I'll say that again. I can take this trade for a credit, but if I'm in this bonus trap area towards the end of expiration, I can also close it for a credit. And this $1 credit could potentially be closed for a $1 to $5 credit because of this profit trap. Now, I've never closed a broken wing butterfly at the full profit trap, but I have let it settle near the top. I've never closed it because sometimes you can't get that perfect fill. But if it settles and let's say price literally is at 65.24, well, that would settle at 24. That's a $400 bonus trap on top of the dollar credit. So this trade could potentially make me $600 if I'm right with the perfect little trade. But what I'm really after is just give me the $1 credit. That's all I'm really caring about. If I can get this trade filled for $1, I want the dollar. So if I can get $1 credit on this one, and I'll go back to this. Let me leave this note up here. Are the visuals making sense on this? So we'll just say this is kind of a little anatomy of a trade segment. We learn it a little bit. This is a broken wing butterfly. Okay. This is a broken wing call fly. Okay. And if you'd like to spend a little bit more time on this, well, I'll flip it around and make it a broken wing put fly, because if we ever want to call the bottom for the day, we can do this on the bottoms and do the same thing. Right. So I'll leave this up for a second, and then I want to go into this chart to show you the reason I'm pending these orders is because if I get filled, okay, if this gets filled, I'm looking for this one to offer $1, okay, $1 and $1. If any of these get filled and I'm right, that's $300 of income. As long as price stays less than 65.20, less than 65.30, and less than 65.35. That's my winner of $1. Now, also, each one of these offers a $500 profit trap as well. Now, I'm not saying I'm going to get those profit traps spot on, but if they do offer some bonus credit, there's a chance that I could, take a bonus trap on top of that, which offers another up to $500. So could it be a $500 bonus trap? Maybe, maybe, maybe. I don't take broken wing call flies or broken wing put flies for a bonus trap. I take them for the credit, and then I also would be willing to let them be managed by the end of the day in order to maybe achieve that profit trap. Okay. So this is no different than doing a credit spread, trying to take $1 out of it. But the difference is this is like a credit spread with a little bit of a profit trap. That's what this trade is. Think about it that way. You do a bear call spread, you just don't want to see price go beyond that line in the sand, right? So I'm doing the same thing, but I'm using this as a profit trap. So I'll take this one step further. Okay, let me get rid of all this stuff. And I'll save the screenshot if you're interested. I mean, I think we have plenty of these segments where it's educational. Let me go back to this. I'm going to take a screenshot here just for fun. And let's delete this stuff. Now, you want to deconstruct this trade. Okay. And by the way, if this is making sense, okay, if this is making sense to you, it's like, I follow that call fly makes sense to me, then you should be in double ups. Because we take trades like this. We take trades that are only low risk, high reward. Now, I don't do a lot of broken wings, to be fair. I don't do a lot of broken wings because that takes more risk. But I like the butterfly spread. I like the fancy name. It's called an iron butterfly. But here's what I'm going to do. I'm going to give you a sneak peek of all these things, because all this really is, okay? All this really is a combination trade. So do you want to know what a broken wing butterfly is? Let's deconstruct this trade. Okay. So if I do the buy call at 64.20 and a sell call at 64.25. Okay. What is this trade? What kind of trade is that? Tebow, yeah, my dynamic trend does have that as well. I have a risk graph in here for dynamic trend. So here is, if I built out that broken wing butterfly, I can go SPX. I'll show you this right here. I'll come back to my point just a second. So option leg, if I buy, I'm going to go to the fifth. So I'm buying the 64.20 and I'm selling 2 at 64.25 and I'm buying 1 at 64.40 there. So that's what my trade would look like. Okay, I did, and damn it, I meant 65, sorry. So 65.20, 65.25, and 65.40. There. That's what the trade looks like. Okay, this is real price. This is real price right here. And this is my $1 credit that I'm trying to achieve. Okay, so what's nice about this trade is if price stays exactly where it is and I can get filled for $1, I'm going to keep the dollar. If price goes down, I'm going to keep the dollar. If price goes up, I'm still keeping the dollar and I have this potential profit trap. Okay. All right. Let me do this. Oops, I brought the whole thing down. I mean, do that. There we go. So keep an eye on this price on my other screen. Let me go into here. Okay. Let's deconstruct this trade. And again, the reason I think this will be really helpful is if this makes sense to you and you can grasp the concept, this is what I'm talking about. This is why I sell something called practical options. This is why I try to teach like the most simplistic way of thinking about options. It has nothing to do with the stupid names of these strategies. Is that it has everything to do with your ability to recognize, okay, if I buy a call here and I sell a call here, or I buy a put here and I sell a put here, what does it actually mean? Who cares about the names? Jade lizards, iron condors, iron butterflies, reverse ratio spreads. Who cares? They're stupid names. It's Wall Street's fancy way of being, I don't know, sounds sophisticated and articulate from the 1970s, right? But let me show you what the trade actually is. If I buy a call at 65.20 and then I sell a call at 65.25, what is this trade? Tell me what this trade is. Yep, and I see it there. So call spread, call spread, call spread, right. It's a bull call spread. And all this means is if price is greater than 65.25, I would keep full profit on this trade, right? So I would buy the call at 65.20. I'd sell at 65.25. That's going to be a debit. If price is beyond 65.25, I keep the full profit on that trade. Okay. Now, what is this trade? If I sell a call at 65.25 and then I buy a call at 65.40, what is this trade? I sell a call at 65.25. I buy a call at 65.40. What is that trade? That's a credit spread. That's a bear call spread. Correct. Bear call spread. So if price is less than 65.25, I would keep the full credit or profit on this trade. Is everybody following me right now? Because this is all a butterfly trade is. So this is the broken wing butterfly because you notice that I'm only 5 wide on the top one, but I'm 15 wide on the bottom one. That's what allows me to have the credit on the trade because this is a wider credit spread that finances the entire debit spread. And the reason that this trade looks this way is because if I drew this out on an option graph, this would be if the asset price goes up, okay, or the asset price goes down, This trade, the 65.20 by 65.25 bull call spread, is going to be defined risk on the debit. And then my profit, as long as price is above 65.25, I have my full profit, right? So this would be where I'm making money right here. So I'm making money here as long as price is above 65.25. Yes? And I'm risking if price is below it. Yes or no? That's a bull call spread. Okay. So what about a bear call spread? Well, a bear call spread is if here's the asset. Oops, I'll go back to a smaller line. If here's the asset and the asset's going up in price or down in price, I want price to stay below 65.25, and then I have my risk here. Okay. And there is more risk because it's a wider trade. So I'd have my credit, I'd have a higher risk. This is going to be my bear call spread. So I'd make money here if price is below 65.25, and I'd have risk if price is above 65.40. Okay. Is everybody following my options graph right now? We're doing this old school, man. Like I draw this stuff up. This is like teaching on a whiteboard. But hopefully this makes sense. Now, if I put these together, imagine taking this left side right here. Okay. Take the left side of the trade right here and the right side of the trade and put them together. What does it look like? If you put them all together, you're going to get a trade. I can't go back enough, but I'll just illustrate it. You're going to get a trade that looks like this. If you put them together, if the asset price is going up or down, okay, if price is going higher, price is going lower, what we're doing is we're putting together a trade where we have financed with the wider credit spread. That is why I can pull in credit. I have a profit trap where everything comes together at the same strike. 65.25 is the max profit on my debit spread. 65.25 is the max profit because anything below that is max profit on my credit spread. That is where the profit trap is. Okay. And I still have a $5 runway for this side, and I have a $5 runway for this side before I start taking on the risk. Then if I'm beyond it, now I have my wider risk out here. That's what a broken wing butterfly looks like. It's just mashing together a bull call spread with a wider bear call spread. So that's why this offers me $1 and a $5 profit trap. And then my risk is beyond the 65.40. That's where I start taking on my risk. In fact, my risk would be here. 65.40. That's my risk. That's my full risk, in fact. This is going to be more like a break even at 65.30. So 65.30, because I still have $1 on the trade. So I technically get like $6 on this side. And this would be the 65.40. If it's beyond that, I'm taking on the full risk. So the most I can lose on this trade would be $9. And the gain that I'm looking for is $1, but I have a potential profit trap of $5. Okay, David, I didn't get filled. That's why in Telegram it says pending, pending, pending. None of those are filled yet. Okay, all right. Does this make sense? This is a broken wing butterfly. And again, I'm doing this because if you're in these daily sessions with me, I would like for you to know a ton of different strategies just to understand it. But this is why I'm talking about teaching options in a way where it's like, you don't have to know all the fancy names. You just have to know what you're trying to do with your trade, right? I'm telling you this. If you can think of a trade in the market, you can do it with options. Meaning if I wanted to express, I don't think price can go this high. I'm going to take a trade that makes me money as long as price doesn't go that high. You can do a lot of trades that way. I don't think price can go that low. I'm going to take a trade where as long as price doesn't go that low, I can make money. You can do a trade that way. If I think price is going to go nowhere, say sideways, if I think price is going to hit a perfect pin price, you can take trades that way. You can literally express whatever you want, whatever you can imagine doing in the markets, you can express it with options. That is what drew me to trading options, because it's just thinking about strategy. What do I want to do in the market? I want to be bearish today. Okay, then you can craft trades to do that. I want to be bullish today. You can craft trades to do that. I don't think price is going anywhere. You can craft trades to do that. That's one of the most amazing things in trading. And if I'm wrong, I know exactly what I'm going to risk. If I'm right, I know exactly what I'm going to make. It doesn't get any better than that. You can manage risk, manage reward, manage expectations, manage probabilities all in one trade before you ever click the trade. Does that make sense? Okay. Rick, did you go lower the, oh, no, hang on. Who's asking for the, David, I'm going to ask you for that broken wing butterfly. Are you talking about the trade we took last week? The trades we took last week for those broken wings, they already closed out. So up here, these trades, the trades we took last week for a 9.5 expiration and a 9.8 expiration, those have closed out. This was for the $1.10 credit closed for 20 cents, the $1.20 credit closed for 20 cents. I'm out of those trades, if that's what you're referring to. The trades I'm posting now are new. These are 3 pending orders for Friday and Monday. The trades last week that we took are already done. Those actually closed on Tuesday because we gapped lower. That helped our trade. We had, 80 to 80+% profit. It was like 83 and 88% profit on those trades. These are pending orders for today and tomorrow. Okay. All right. Any questions on this little lesson here today? This is, call this my segment like anatomy of a trade and just kind of deconstructing or dissecting a trade. All this is a debit spread combined with a credit spread, right? Now, when I do this in my double up service, I don't really do a broken wing that often because the broken wing offers higher risk than reward. So what I do instead is I usually do equidistance like this. So I take a super small risk and I have a wider reward. And so this one usually offers me like today I looked at it, it was this morning trading for like 40 cents debit. Well, 40 cents debit could potentially pay me $460 profit. So it offers me a 10-to-1 setup. Now, I'm probably not going to get a 10-to-1 setup, but if I were to get 2-to-1 or better, I'm just going to take the profit. So if I could open it at 40, close it for 60 cents, 80 cents, $1 and change, that's a great trade. And we do a lot of those in double ups. Okay. All right. Where's price at for our call spread right now? We are sitting at about $35 to $40 profit right now. I'm going to try to let this run a little bit longer. I'm going to try to get out of this thing for, I don't know. I'll set the debit at like 20 cents right now. I'll set the debit at 20. I'm going to try to take a majority of this profit today. And if we have price going, I guess I'll set it for like 10. If we have price going way down and I can grab 10 cents, meaning like $1 gets me $90, I'll just take that. So I'll set it at 10 cents right now and just kind of monitor price. If price goes down a little bit for the day, that should offer us most of the profit. If price comes back to find this like 50% ATR and still finds like the 75-80 zone, okay, fine. Then I'll probably end up looking to take another trade at a higher credit. Okay. But the day unfolds. My work is kind of done. I just kind of monitor and let price do what it's going to do. Okay, nice. Bill says out today at 50 cents, out today at 50 cents from Ed. Bill, nice. That's fine. If you want to grab 50% of the profit, that's still a heck of a win. So I'm in for $1. It's up $40. $50 is good. $50 is great. I'm going to go after a little bit more for right now. I'd be happy at like $70, $80 on the trade. So if I close it out for like 30 cents or 20 cents, I'd be pretty happy with that for the day. Okay. All right. How's that little anatomy of a trade discussion? What I'd like to do is I want to take away some of the intimidation factor that comes with just trading, anything other than a call or a put. I'm telling you, it's like you can open your mind and you can challenge the learning curve a little bit, because when you think about just a combination of, if I want to do this in the market, if I don't think price can go that high or price can't go that low, then you can trade that. So that's why I love options so much. Right. But if that was not too much to digest, that is also why, I'm running a masterclass today at 1 p.m. and we're going to go through double ups for day 2. Close for a debit if price is below 65.20. Well, on what trade? The only trade I have running right now is this. This is the only trade that I have running. So that trade's in for $1, and I'm putting in, I'm sorry, this one. This is filled for $1. This is in for $1, and I'm going to put in, oh, crap. This is a SPX 9 for expiration. Sell the 64.75 call. Actually, never mind. I'll just cancel this. Edit. There we go. Setting a take profit order at 20 cents debit or lower. There. And then this one is still pending. These are all pending. So I'm trading a little bit out for tomorrow and Monday. I'm essentially trying to call the top. But, and again, trying to do it in like a 10 delta, like way out of the money, above all-time highs. I mean, are we going to have like an awesome non-farm that rips the market to all-time highs? I would hope not, based on what the market's pricing out tomorrow. Okay. All right. So, masterclass today at 1 p.m. for double ups. If you want to learn more about high reward, low risk, always, this is the strategy. Okay. All right. Average winners, 86% return on risk, holding these trades for less than a day. You can check out, terms, conditions, disclaimers on our homepage. Obviously, I'm not a 100% trader. I win a lot of my trades and a lot of my services. Waterfall income is over 93%. Daily profit plays right around 90%. Pinch points at 84%, 83% right now. Newsbreakers is 80+%. Double ups is at 60%. And you're like, oh, why does this guy lose so much? Because this is only focused on managing winners. I take such small risk in these trades, it is almost insignificant to me. I only worry about managing winners. And a lot of my winners, I'm going after triple digits. So if I can make 125% return on capital, if I can make 150% return on capital, 200% return on capital, that's what I'm doing for every trade. I just had a member email me yesterday, and he took a trade with me and closed out for 150% winner yesterday. It's that easy. Okay. So again, I will teach you all this stuff in class. We're having a master class today at 1 p.m. So you know who I am, Chris Pulver. Hopefully this will change the way you see the stock market. Okay. This is a way to turn Wall Street's biggest undercover bets flows into opportunities that have shown the power to double, not in a year, not in a month, but in just a couple of days. Literally, I'm in these trades for maybe the same day or one day out. Research like here in Apple, like them or hate them. Everyone has Apple phones. They've got crazy market share, but they haven't really done anything in 20 years. But Apple's still a great stock. It's still one of the Mag 7s, but it doesn't matter. Okay. Stock's taking a world-class beating. Most folks, it's a red flag. There's what about tariffs? What about China? Who cares? You can't know this stuff. This is what matters to me. Wall Street shows us there's an undercover bet that Apple stock will be surging in the coming days. If you know that ahead of time, you get into a quick trade, benefit from that directional move. Takes about 30 seconds to get in the trade. And the next day, you got a triple-digit winner on Apple. Shoots up 127%. That's on one of my trades. Okay, meaning that $1,000 would have more than doubled. $2,500 would have more than doubled. Obviously, that's not bad. Okay, so these special setups are called daily doubles. You're not going to hear about these on Bloomberg or CNBC or FactSet or whatever. You're not going to see about this. This is in my software. This is what I use every single day as my visual roadmap. Okay, thanks, Jim. I see that comment. That's nice. And a lot of people don't know this because I've had this on the institutional side, and I was a retail trader. I pay for the software every year, and I've had it for 6 years. You'll be able to spot some of Wall Street's biggest undercover bets and turn them into opportunities that have the power to double our investment. I'm going after big reward, low risk trades in just a couple of days. Watch it happen again with Tesla. Now, if you were trading Tesla at the time, if you're worried about what Elon Musk is going to do, what about Doge, what about Trump and Musk fighting, I wouldn't have blamed you. Stock was ripping through the election, and then it crashed in 2025.